The Central Bank of Nigeria raised its monetary policy rate by 50 basis points to 27.52%, marking the fifth consecutive rate hike this year. Announced by Governor Olayemi Cardoso after the 297th Monetary Policy Committee meeting, the decision aims to curb inflationary pressures despite signs of moderating inflation. In addition to the MPR increase, the cash reserve ratio for commercial banks was raised to 50%, while the CRR for merchant banks saw a smaller increase to 16%. The liquidity ratio was unchanged at 30%. Well, joining me for this, I have Dr. Samson Simon, Chief Economist, ARKK Economics Data Limited. Thank you for joining me. And I also have with me Dr. Femi Egbesola, President, Association of Small Business Owners of Nigeria. Thank you, Dr. Egbesola, for joining me today.
Thank you for having me.
Right. Well, at the 297th meeting of the MPC, the committee decided to further tighten monetary policy. Did that come to you as a surprise? I mean, did you see it coming?
Not at all. It beats our imagination. We never expected it. Going by the very harsh economic realities at the time and saying that businesses all over, starting from nano to micro, small, medium, and even larger businesses, are struggling to survive at this time. And going by the increment in some of the levies and taxes of government, we never expected MPR to go up. To us, it's a shock, and we're looking at how we can begin to now contend with this news. We call it bad news.
Okay, so before we come to the implication of that, what you call bad news, I mean, I listened to the governor, and he was saying something that, you know, while the headline inflation is, we're saying, you know, ease, we're saying tapering, we're saying disinflation, but the core inflation was really not, you know, bulging. It was still going higher and higher. I mean, wouldn't you see that as an important consideration for this decision?
Well, really, we discovered that it is just a full inflation that has just been arrested somehow by intervention of government. All the other sectors are still driving high when it comes to inflation. But for us in the real sector, we believe that arresting inflation is not just by raising MPR. There are other reforms that can be done to arrest inflation. We expected government to be more focused now on structural reforms, particularly in the agri and this value chain being the major driver of inflation, intervening, providing support, providing funding, providing technology and all of that. We also expect some form of reform and intervention in the area of energy. Energy cut across virtually every player in the business sector. We expected that government should also do some form of reform in exports to make it more liberal for everyone to export who are in business and more of foreign currency to the country. We also expect reforms in the area of technology. We expect government to make it possible for technology to be easily adopted by every businesses so that they can also run their businesses at low cost. We're expecting reforms in transformation. We have heard of CNG vehicle. It has not really been implemented to a larger degree. We're expecting that by the time government to liberalize that sector and support it such that virtually every vehicle can easily convert to CNG, they will begin to see a lot of work being done to arrest inflation. To us, the raising MPR should not be the priority list in arresting the inflation at this time, particularly when we have had it for 8 different consecutive times without no major positive results.
Well, I like what you said about Forex. What will be your solution for fixing Forex? Because when you look at Forex, they will tell you that when the MPR is high, you know, that would probably bring a lot of portfolio investors into the country. And when they come into the country to invest, we have more dollars, and maybe that will also help us reduce the pressure on the Naira. What do you think about that? I mean, shouldn't we also look at that aspect?
Ordinarily, that should be that is what the case should be ordinarily. But you should understand that our climate is a bit different. We have a lot of challenges over here. So bringing in investor, getting investor investment in Nigeria is just not about fighting inflation. There are other challenges that also need to be addressed if we really want to bring in investors into the country. And this to us is still mitigating against getting investors. For us in the business sector, it's really pretty difficult now more than ever before to get investors bringing their investment into the country because the issue of insecurity is still there. Some policies does not really support investment. One of it is the fact that when you bring in your fund in some sector of the economy, you cannot repatriate that fund back as at when due. The policy says that you can only repatriate 50% of what you have in your earnings or profit back to your country at a particular time. That is also not encouraging investment into the country. We have also policies about regulations and taxes that are there that are irregular and are not harmonized yet. One of the regulations has to do with getting certification for product and services that you need to work with, and this is not attractive to investors also. We also have the issue of investors not being sure to be able to project what will happen the next day, the next month, the next year. That is short, medium, and long-term projection, because the economy is not stable. The exchange rate is not stable. It may be something today, the next day, or the next few hours, it's something else. So even investors cannot actually project what they should be expecting in a near future or even now. And all of this to us is mitigating against getting investment into the country, and it is really affecting our businesses.
Right. Well, we just saw the news yesterday about FEC, approving the economic stabilization bill. What do you make of that? Don't you think that's going to, make things better at the end of the day? Because these were some of the recommendations we've seen, whether it's the ASAP recommendation or all of these recommendations lumped into one. With FEC approving, this particular one, what do you think about it?
It's a good one in the right direction. These are some of the initiatives we are expecting government to have done even before. So having it done this time, we applaud government for this initiative. But most times here in Nigeria, one thing is to announce an initiative, one thing is to launch it, another thing is to implement it in a way that it will have the expected result. We are looking forward to seeing this implemented with the support of the critical stakeholders. We see when you bring out an initiative or policies and you don't have a strong handshake with those critical stakeholders in that particular sector or sectors, you may not really get the best out of it. We will expect government this time around to begin to engage critical stakeholders in the business ecosystem to be able to ensure that this goes down and everybody benefits from it. Without doubt, it may go by like every other policy that is very good on paper, very good to hear, but without achieving the expected results. Moving forward, we will also expect that government should begin to initiate this launch immediately. The hardship in the land is so much that everybody needs a cushion in this time. They need intervention from government to be able to survive this time, both as citizens and as businesses. So the implementation should start right away and to cut across every sector of the economy so that we can all begin to breathe a sign of relief.
Well, interesting. We'll wait until it's transmitted to the National Assembly and hope that they will expedite action on that. Dr. Samson Dr. Samson Simon, beg your pardon. Thank you for joining us.
Thank you for having me.
All right. Well, on a brighter side, with the easing of monetary policy in leading economies, this means more inflow for Nigeria as yield-hungry investors will then bring in their hard currencies to Nigeria. Don't you see that as a bright spot? Something to be excited about.
Well, it has its good sides, like you rightly mentioned, because our own interest rates are higher relative to other economies, and we have been struggling to attract FX. So with that, the possibility of attracting more FX is there. But we have been attracting FX. We have seen accretion in the foreign exchange reserve. But
Dr. Simon, if you can hear me, I'd like you to just take it up from there. I guess it's a network issue. But of course, he's talking about, we're seeing the accretion, but at the end of the day, is this enough? Is it sustainable? Can we continue to, use debt, to shore up our reserves? I guess that was where he was going before, the network just caught up with us. Well, Dr. Egbesola, if you can still hear me, can you confirm? All right.
Very loud and clear. Thank you.
Okay, so now in addressing or arresting inflation in Nigeria, what are your recommendations, really, whether it's from the monetary policy side or even from the fiscal policy side? What are the things we need to begin to see? Because the ESB we're talking about here is just the fact that has approved it. It's still going to take time to probably get to the National Assembly, and we don't know if the National Assembly will expedite action. There is still a lot of having to wait, waiting. So, while we're waiting on all of that, what are your recommendations for decisively dealing with inflation without necessarily making production a trade-off?
Well, that has always been the case. We waiting and waiting. But in the meantime, we believe that government should be more particular and strategic on focusing on the driver of the economy. The driver of the economy this time are the SMEs, the small and medium enterprises we have in Nigeria. This sector really needs to be supported. That's a sector that houses about 86% of the labor force and owns about 92% of the entire enterprises or companies we have here in Nigeria. So if we really want to fight inflation, we need to pay particular attention to that sector and support that sector. We should be able to assist that sector to be able to access finance, not just accessing finance that are affordable and accessible. This is very key. And when you are talking about raising MPR, it means that it will be more difficult for these SMEs to be able to attract to access funding. And when they are unable to access funding, it means they will not do it. They will run low on productivity and will have liquidity problems. At the same time, too, you will discover that they will begin to find it difficult to meet up with their loan obligations with the bank and eventually make the bank to be averse to lending out money to some of these players in the SME system. We also would want government to look at regulations. Regulation is important and key to what we do, and that is what we preach about, ease of doing business in the SME sector. It is important that government begin to look at most of the policies that have to do with business and the economy, such that we begin to see which one we need to review or particularly drop away and replace with a better one at the immediate. If you ask me, another tax is on the way, which is called the cyber security tax. 0.005%.
Well, talking about the cybersecurity tax, I mean, the CBN has said, you know what, these were some of the things we did last year. We just brought out this document. It doesn't mean we're doing it again. I mean, that was the clarification they give, and they withdrew the document. So let's just believe what they have said to us, that it's just a document to present what we have done or some of the regulations and guidelines we came up with in the year 2023. So we'll probably just leave it there. Dr. Simon, if you can hear me, I'd like to get your closing shot on this conversation.
I can hear you clearly. Right. The monetary authorities have been doing their own bit to tackle inflation. And even though most of us expected them to hold interest rate, they have some points for hiking it, because the inflation that has been decelerating is food inflation, which is clearly not within the purview of the central bank. So for their own part, for the core inflation, there is still a lot of work that needs to be done. Sadly, what is really missing is that the fiscal authorities have to meet the monetary authorities halfway for us to see results. If that does not happen, they'll continue to work at cost purposes, and we are likely not going to see the desired result.
Right. Thank you so much, sir. I mean, aptly and succinctly put. Thank you so much, Dr. Samson Simon, Chief Economist, ARKK Economics Data Limited, for your time on the show today.
Thank you for having me.
All right, Dr. Femi Egbesola, President, Association of Small Business Owners of Nigeria. Thank you so much for your time and your thoughts.
Thank you for the opportunity.